I love side hustling. It's a great way to dabble in a new hobby or earn extra income to pay off debt. But whatever side hustle income you earn has to be reported to the IRS. So you're going to need to handle your taxes for your side hustle. In this video, I'm going to be talking about 4 different ways that you can do that so that you are prepared and organized come tax season. Hey guys, it's Justine with The College Investor, investing and personal finance for millennials. So if you've started a side hustle, you're making a profit, then you're probably wondering what you need to do about your tax situation. Well, there's actually 4 different ways that you can do this, and the first way being is you need to start tracking your income and expenses. So whatever income that you're bringing in from your side hustle, you should definitely be tracking, as well as whatever business expenses you might be paying out to maintain your side hustle business. Now, when you track these 2 things, the income that you earn and the expenses that you pay, it can be a lot easier to figure out how much you owe in taxes. Now, there's 3 different things that you'll want to look into setting up. The first being a business checking account. Your business checking account is going to be separate from your personal checking account so that you can account for all the side hustle income and earnings that you're bringing in. The second piece you'll want is a business savings account. What you're going to do is you're going to transfer a portion of your income, of your side hustle income, from your checking account into your savings account, and that money will be used to pay your taxes. More on how you're going to do that in just a second. The third piece that you'll want to look into is a rewards credit card. Now, you can use a business credit card to pay for your business expenses and then use your business checking account to pay off that credit card every single month back to a 0 balance. If you are a responsible credit card user, this is a great way to build up points and reward systems so that you can start earning cash back or qualifying for free trips. Now, if you're just getting started and you haven't really built up a profit yet, don't worry. But the second that you start transitioning into making a profit, you'll want to set up this process. Now, if you want to really put this system into work, you'll want to use a really good software to help you track the income and expenses through these types of accounts. Now, you can use a software called Tiller that helps you track your income and expenses, or you can use a business accounting software such as TurboTax. I personally use the self-employed QuickBooks, and that's a really easy way for me to log in daily if I wanted to check what my profit is. It syncs up with my business checking account, and then I can see what transactions are inside of that account and sort them accordingly. And then I can just download a profit and loss statement and send that to my CPA for my tax return. One thing to note, if you're still using your personal checking account for your side hustle income or you're paying for expenses, that's okay. It just can get a little messy. So you're going to have to go through your bank statements and look for transactions that were business expenses, and that means going line by line trying to find those expenses. Keep track of them and then file them on your tax return or give them to your CPA. You can just use a Google spreadsheet to start tracking that. If you're just getting started, I think that's okay. But if you end up really going full-fledged with your side hustle business, you're definitely going to want to go back to that example of the checking and savings account plus the credit card. Also, make sure that you receive a 1099 from any of your side hustle businesses. So that's especially true if you're working with clients or you're working through a business such as you're side hustling for Uber. They're going to issue you a 1099 and you're going to use that form to report on your tax return. Once you have your business bank accounts set up, then you are going to set aside 35% of your profit for taxes. And I know what you're thinking. 35% is a lot of money. But here's how that's broken down. The first way that's broken down is through self-employment tax. That rate is currently at 15.3%. It's huge, I know, but you're both the employer and the employee in this case, and what you are paying into is Social Security and Medicare. Now, 12.4% goes towards Social Security and 2.9% goes towards Medicare. The second portion is your federal income tax. Now, people most likely pay anywhere between 15 to 20% of federal income tax, and that really just depends on your tax bracket, and a CPA can help you figure out exactly what that percentage is. The third portion of this 35% pie is your state income tax. Now, some states don't have income tax, which lucky you if that's the case. Now, if you do live in a state that has income tax, like where I'm at in California, we have the highest income tax, I think, in the country. And income tax, state income tax can range anywhere from 0.3% all the way up to 13%. And you have to factor that in when you are setting aside money for taxes. And so that's why the general rule when you are running your own side hustle and you're self-employed is 35% of your profits should be earmarked and saved for taxes. Now, remember that savings account that I was talking about, this is where that money goes, and then you are going to use money from that account to pay for your taxes, which leads me into the third way to handle your taxes is to make quarterly tax payments. Quarterly tax payments are going to ease the burden of paying taxes come April 15th. So instead of coming up with a lump sum of a whole bunch of money that you may owe, you're already going to be making those payments 4 times throughout the year to ease that tax burden come April 15th. Now, this is broken out into 4 different quarters, and you're going to pay your quarterly tax payment on the 15th of April, July, September, and January. And you can actually, in most cases, make your payments online now. That includes federal and state. So in California, you can pay your estimated state tax online, and same through the federal system. You can make quarterly tax payments online, which makes it a lot easier than trying to figure out how to tear off vouchers and submit a check. I personally find the online system a lot easier to use. That's just me, but know that you do have the option to mail in a physical voucher. Now, if you're late on any of these payments, you may end up owing interest or penalties during that year. So just be aware to make your payments on time. Now, the last way that I have for you on handling your taxes is to actually legitimately lower your tax burden. And so you can do this through 2 different ways. You can write off your business expenses, and you can take advantage of tax deductions and credits. So the first way, writing off ordinary business expenses. Let's say you have a coaching business that you do online and you use a video conferencing service that you pay for monthly. You can write off that video conferencing subscription because it's part of your ordinary expenses. Now, you can also write off bigger purchases, such as I wrote off this Canon camera that I'm filming on right now because I use it for business purposes. And I also got to write off a portion of my cell phone bill because I use my cell phone for my business. The second way to lower your tax burden is to take advantage of those tax deductions. So there are self-employed retirement accounts that you can contribute to, including a SEP IRA, a solo 401k, or a simple IRA. Now, if you set up one of these retirement accounts and start contributing to it on a regular basis, you can actually use that as a tax deduction for that current year. Because you're not withdrawing that money until ideally retirement, you're not going to be paying taxes on that money until you're in retirement and withdrawing from that account. So this is a great way to ease your tax burden for the current year. I highly suggest setting up one of these accounts if you are in a legitimate side hustle where you're creating consistent profit. Earmark some of that towards your retirement, and you're going to see the amount of taxes go down, and you're also saving for your future. It's a win-win. All right, so to recap. First thing you want to do is to track your income and expenses. The second thing is you want to set aside 35% of your profit for your taxes in a separate business savings account. That way, The third way is you can pay your quarterly tax payments with the money you set aside every single month. And then the fourth way to handle your taxes with your side hustle is to write off legitimate business expenses and contribute to a self-employed retirement account to ease your tax burden come tax season. So I am a huge fan of side hustling. If you are wanting to dabble in this, or you've already got one going and you want to make this legitimate with the IRS, then make sure you've got these 4 steps covered. If you want more information on side hustling, be sure to check out all of our free resources at thecollegeinvestor.com.